This is the Friday, September 18th, 2015 version of the Market Plus segment. Joining us now is John Roach. John, welcome back.
Thanks, Mike.
We've got a couple of great questions here from our Twitter followers and Facebook followers, and I want to start off with Phil in Ontario, Canada. His question is, corn has fallen back this week on quiet trade. Looking out to the future, what will USDA do with corn on October 9th?
Well, Phil, I think the first thing to recognize is the reason we had the run-up last Friday was because corn crossed up through the 20-day moving average. So we had a technical green light, and we saw a pretty aggressive technical buying that lasted for 2 days, and then it ran out of gas as it met selling, and then market continued to trail on lower and continued to reflect the selling, and so now we're back down to that support area. We'll have to see whether we can hold it or not now. In October, I think the government will reduce the yields. I think they'll reduce the acres on corn both. I think both numbers will be smaller, and I think the production number will be smaller as a consequence. I don't know that it's going to be a lot smaller, but I think it'll be a little smaller.
Now, Phil had a follow-up question. He's wondering, is $4 futures deferred? Does this push back the time in which we'll get to $4 corn?
I mean, we're at $4 on some months, well, so I don't know if I understand the question exactly.
I think looking at December corn.
Can we get back up to $4?
Yeah.
I think we can. I think, again, look back at last year. Last year's a really good pattern in that farmers didn't like the prices last year and they didn't sell very much, but the crops were monster big. And then as we moved through the harvest, we found farmers didn't like the prices at all and refused to sell, and the corn market from the low in September to December had an 80-cent rally. And so I think that's the best pattern to look at, that what will it take to get the volume of corn necessary to supply the market? What price level will that be? And I don't believe it'll be today's price level. And so I believe there will be opportunity to move that December corn back up to the $4 level before Christmas.
Now, last year, we were also coming off of several years of record profitability. Farmers had a lot of cash on hand. They were able to withhold purchases. Do you find that's still the case when you talk to farmers today? Do they have the wherewithal to hold corn off the market through, say, December?
Well, they certainly have a lot less cash. There's no doubt about that. But farmers tend to not want to sell grain in the old tax year, and they'd rather sell it off in the new tax year. And so more people are in that position than are people hurting for the money. So, okay. I think that maybe that changes things next spring. Okay. In fact, as I expect it will change things next spring, but I don't think it'll change this fall. Gotcha. I think farmers will be able to hold this fall.
Okay.
And I also think it's the right thing to do.
All right. Now, next week on the program, we're talking ethanol, talking to the folks at Poet. We've got a question here from Mark in Des Moines, and Mark's got a comment followed up by a question. So he's wondering, corn prices in this century have been affected by the rise and fall of oil prices. This is implied to be due to the impact of ethanol. How closely are corn and oil prices moving? Is it a close relationship still today?
There's a relationship, certainly, but not maybe the kind of a relationship that people fear. The cheaper gasoline prices have cheapened ethanol prices, but they've also increased the consumption of ethanol because we're mixing about 10% of every gallon that goes out of the pump is ethanol blended. And so cheaper prices are actually positive for ethanol demand, which is kind of a backward way of thinking about it. But remember, it is a volume-based product, and the more volume that we move, the more ethanol you're going to need.
And then the more corn you're going to grind to get that.
And the more corn you're going to need to grind to get there. Now, the part here that I have a little caution with is how much of the higher price level that we've seen in corn, how much that's been caused by ethanol. What's interesting is the ethanol consumption plateaued in 2010, or virtually plateaued in 2010. So the high prices that we saw in 2012 had very little to do with ethanol, had to do with a weather problem growing the crop. And so ethanol and that industrial consumption of corn is running relatively stable and has become almost a non-factor in the pricing of corn because it's almost the same number every year.
Okay. Now we've got a question here, kind of a trader thought process question. Matt in Nebraska is wondering, why is the USDA so bad at getting reports correct and why do markets react to them anymore?
Well, obviously, the first question is not correct. The USDA would only get trade to react if they were believable. If someone comes and makes an announcement that historically makes bad announcements, the market doesn't pay any attention. This is real money people are betting. It is their real money, whether they happen to be an individual or a big corporation, and they only believe those people who tell them the truth. And so they look at the USDA report and say, it's the best we've got. And so we advise growers the same way. It's the best report we have. You have to, and if you talk to a grower who's had an enumerator in the field and sees how they count and measure and so forth, they get a lot more respect for that. Or you talk to someone who is out doing the Monday crop condition reports. These are all serious people doing the best job that they can, and I think we need to give them a little slack, cut them a little slack. Of all the different departments in the government, I have the most faith in the USDA.
And of course, their numbers are going to change as more evidence becomes available.
Just like on the farm. We stand on the outside of a field and we think we know what that field's going to produce, and then every month we find out that Mother Nature had an influence on it, and then finally, just before we put the combine in, we think we know what it's going to produce, and we're lucky if we're within 10%.
Now, we've talked a lot about what to expect as we get through this harvest, 2015. John, what are your thoughts for those guys looking out a little bit farther, say into 2016, 2017? Are there some opportunities out there that we should be taking advantage of in the field?
You know, this is going to be something that people really kind of raise their eyebrows about maybe, but see, I believe if you're a grower, you need to be looking very carefully at your cost of production. And if you look at your cost of production for 2016 and 17 and 18, and you believe it's going to cost you more than $4 to raise corn, you should look seriously at renting some more ground on the Chicago Board of Trade or the CME.
How would you do that, John?
Because you can buy that corn finished, delivered in Chicago for a little over $4 a bushel for 17 and 18 and under $4 for 16. And so to my way of thinking, these are too cheap of prices. And I know people are talking about these prices being down here for a long time, but if you can buy corn for an average of $4 or just a little bit above or a little below, for the 16, 17, and 18, that's like a 3-year contract to rent ground, and I don't know very many places you can rent ground and have a $4 break even delivered to the terminal.
What do you think about soybeans?
I think soybeans are a different story. I think the supplies on corn are going to tighten, and I think the acreage is going to be reduced. I think soybeans are going to be the crop produced in Brazil, much bigger production in Brazil, not much, but bigger production in Brazil, and
After 3 record
smaller
crops.
Production in the United States.
Okay.
Our carryover numbers are just really big on beans. It's going to be hard to beat those numbers down very far.
With that in mind, would you sell 16, 17, 18 beans, or do you just wait and see how this demand picture works out on the soybean side?
We pay attention to the calendar when we market. And in September and October, we don't want to sell anything if we can possibly avoid it, unless we really like the price. And nobody likes this price. So it's the wrong time. It's no more than you would think about planting a seed in October would you think about marketing in October if you're planning this out over a longer period of time.
John Roach, thanks so much for joining us this week.
Thanks, Mike.
Thanks to all of you for sending in your questions via Facebook and Twitter. Please continue to do so, and we will get expert analysis right to you. Thanks for watching, and have a great week.